Welcome to On Course Financial, Charting Your Financial Future, the show that helps you make sense of your numbers, your taxes, your retirement, one practical conversation at a time. I'm Chris Brumlow, partner at the BAB Group, a financial professional, investment advisor representative, and a retirement planning specialist. The BAB Group is a proactive wealth management and accounting and tax firm built on one idea: help you understand your numbers and what they're telling you, connect them to real decisions, and use them to plan ahead, not just reacting to whatever comes next. That's what we do every episode, and that's what we're doing today. Most people think about retirement in terms of a number, a lump sum they need to hit, a balance on their statement. But your portfolio balance doesn't pay your bills. A paycheck does. Today, we're reframing the retirement budgeting discussion around a different question. Not how big is the number, but can this number reliably pay me what I need month after month, year after year for the rest of my life? And that's the idea behind what we call your retirement paycheck. It's exactly what our planning process is built around and what we work with our clients. During your working years, your paycheck did the heavy lifting for you. It showed up on a schedule. It covered your fixed cost. It funded your lifestyle, and it built your life around its reliability. Retirement doesn't remove that need. It just removes the paycheck. The real job of retirement planning isn't accumulating a big number. It's engineering a new paycheck out of the resources that you've built: Social Security, a pension, if you have one, and withdrawals from your savings and investments. We call that your retirement paycheck. And it's the frame we use with every client instead of just starting with an account balance. Here's why the shift in language matters. A balance can go up or down with the market, and people tend to panic when it drops because it feels like the whole plan is falling apart. A paycheck is different. It's a monthly number that you can plan a life around. Our job is to build that paycheck so it holds up and give you a way to see at any point whether it's on track. A retirement paycheck isn't one flat number. It has to cover everything we've talked about in this show when it comes to retirement spending: fixed essential costs like housing or insurance, healthcare and Medicare related costs, and the fun stuff, the discretionary spending that makes retirement enjoyable, the irregular expenses that show up every few years, and the taxes on the income itself. Before you can test whether the paycheck works, you have to know what it's actually being asked to fund. That's where the budgeting side of this conversation comes in, and it feeds directly into the next step: stress-free testing, whether that paycheck can actually hold up over time and in a lot of different market conditions. In our practice, we use a tool that helps us look at that from an income perspective. And instead of running one single one-time accumulation and hoping it holds up for 30 years, we like to model the retirement paycheck against a wide range of market conditions: good years, bad years, and everything in between. And it shows us whether or not that plan holds up over time, not just the average case. And guess what? It's built to change because life happens and life changes. The output isn't a single pass or fail. It's a set of guardrails. Think of them as zones. In the middle is the comfort zone. It's the range where your paycheck is sustainable as planned. If markets run better than expected, that guardrail tells us there may be room to spend more, fund a goal earlier, or increase your giving. If the markets run worse than expected, the guardrail flags it early, well before it's a real problem, so we can make small adjustments now instead of big ones forced upon us later. That's the entire point of the exercise. Instead of reacting to a bad year in a panic, you have a plan for what a bad year means, decidedly ahead of the time, calmly. Let's go back and take a look at an example. A couple that's built their retirement paycheck by category: fixed cost, healthcare, discretionary items, travel, irregular expenses, and taxes. And they land on a monthly number that they need for that paycheck to deliver. You run that paycheck through an income-based planning process. And in most market scenarios, their paycheck holds up comfortably with room to spare. But in a subset of weaker market scenarios, The model shows that their spending would eventually cross into the caution zones around, let's say, year 12 or 13 of retirement. It's not a crisis, but it's a signal. Knowing that now in advance means that we can build in a small planned adjustment, maybe dialing back discretionary travel slightly in a down market year. And instead of the couple discovering the problem for the first time when it's already happened, that's the difference between the static budget and a tested retirement paycheck. One that just tells you a number, and the other one tells you how that number behaves under pressure. And it's important to have that conversation with your advisor, not just once a year, but once a quarter. Stop thinking about retirement as a balance that you've got to protect and start thinking about it as a paycheck you want to build. The one that has to reliably cover all your fixed costs, your health care, your discretionary spending, irregular expenses and taxes. Secondly, build that paycheck by category, the way we talked about that. That way you actually know what it needs to fund. And third, don't stop at a single calculation. Stress test that paycheck against a real range of market outcomes, the way our planning process does on an income-based program. Now you'll know how it behaves in both good years and bad years. And fourth, treat guardrails as a planning tool, not a scoreboard. They exist to tell you when a small, calm adjustment is worth considering long before a small issue becomes a large one. And fifth, revisit that test regularly. Your paycheck, your spending, and the markets all move. The plan should move with them. A number in an account doesn't tell you much on its own. A tested, reliable paycheck does. If you've never seen your own retirement plan modeled this way as an actual paycheck, stress tested against real market scenarios through a income-based planning process, that's the kind of conversations that we have with our clients at the BAB Group. That's it for this episode of On Course Financial, Charting Your Financial Future. If today's conversation gave you something to think about, share it with someone that can use it. And hit the follow button so you don't miss what's next. I'm Chris Brumlow, reminding you that financial success isn't about reacting to what just happened. It's about planning for what's next. We'll see you next time on Course Financial. Investment advisory services referenced in this show are offered through AlphaStar Capital Management, LLC, an SEC-registered investment advisor. The BAB Group and AlphaStar Capital Management are separate and independent entities. SEC registration does not imply a certain level of skill or endorsement by the Commission. The information shared on this episode is for general education purposes only and is not intended as personalized legal, tax, or investment advice and shouldn't be relied on as a recommendation for any specific strategy. Please consult your own financial, tax, or legal professional before making any decisions based on this content.